What is up, guys, and welcome back to another video. Today we're diving into the current state of the US stock market, as it has been quite a roller coaster as of recent, so there is a lot to unpack. First up, let's talk about the S&P 500. Currently, the S&P 500, better known as SPY, is down around 3% today. Now, this drop has led investors to be on edge, wondering if this could be a temporary dip or leading to a larger market correction. Now, not only is the S&P 500 down around 3%, but the Nasdaq is down around 4%. So we are seeing a lot of drops in these tech stocks, which have been hit particularly hard, showing a lot of volatility, especially with these tariffs and other news like that. So in today's video, we're going to go ahead and break down why the market could be on this decline, where we could be looking to find a bounce, and what could come from a possible market correction, where we could go ahead and target to the downside, so on and so forth. So let's go ahead and jump right into this video. And just a really quick word before we do get into this video, I do want to let you guys know that we have our free Discord linked in the description down below. You guys can join over 500 plus profitable traders, and we have over $500,000 in premium profits year to date. Now we're looking to target around $3 to $5 million, so make sure you guys do join up and do not miss out on that opportunity. All right, guys, and to jump onto the chart here, we can see after hitting all-time highs of around $613, the S&P has now sold off almost 9%, heading down to lows of around $559. Now, I do think that a relief bounce is needed. I was expecting that to come this morning off of these EMAs, and I am still expecting this relief bounce to come soon. I think selling off in this manner is a little aggressive. Now, if the market were to jump around 9% in 2 weeks, that would obviously be a bit extreme, and it's going to work the same way as the market starts to fall. So this obviously does lead me to believe that a recovery bounce is coming. Now, I do not think we will reclaim all-time highs by any means, but I do think that we do get a good bounce back up to around the mid 80s, maybe even scratching into that $90 range. I think a good zone for us to go for is going to be this golden zone targeting as the high, but I do think at least going for this fair value gap will be a reasonable bounce. Now, obviously, this is going to be dependent on where we bounce. So if we were to bounce from here, maybe that could be this golden zone right here. But if we were to head all the way down to something like 540, obviously that bounce might not take us all the way back up to that 590 range. But nonetheless, I do think that a recovery bounce is coming. And I do think that will be a good little play for us taking a call back up to that range. I know a lot of our premium Discord members have that April 4th call all the way back up to around 590. So whether it gets there or not, we'll still see a good bit of profit on the climb back up there. So I do think that with this recovery bounce, we can go ahead and target at bare minimum, at least back into the 580s. And I do think that a good zone for reversion out of that would be targeting something like 587 to 589, and then see if we can get all the way up to around that 593 level where this golden zone currently sits. Now, I do want to zoom out a little bit and talk about some targets where we could possibly bounce out of. And my first target here is going to be from 561 to 556. Now, with old prior resistance and consolidation right here, eventually turn support, I do think that this is a good area to at least see this relief bounce, taking us back up to around that $585 range. But if we aren't to get a bounce here, I obviously think that there's going to be some more downside, which would most likely lead us down to this fair value gap, targeting around 545. Obviously, if the market goes down that far, we are going to really have some issues with market health, and we'll definitely need a bounce by then. And by then, the recovery bounce might be even larger, as we are going to have to come back and retest some of this before heading down for more. Now, with targets all the way down to 556 to 545, once we are to find this area where we're going to reverse out of for that short-term bounce, I do expect this bounce to be quite aggressive, seeing most likely a 3 to 4% intraday gain within SPY coming in the next few weeks. Now, I do think that there is a good possibility that this does come tomorrow if we are to see this 556 area hold, but if it isn't to come tomorrow, I do expect it to come in the next few weeks, and I do expect that bounce to be quite aggressive like I said. We'll most likely see a 5 to 6% recovery bounce before continuing back to the downside, and we'll go ahead and talk about some of those targets now. Now, taking a look at our downside targets, I do think that once we are to break 524, 511, and 493, a market correction will be happening. Now, I do think that will obviously lead to some more downside, but I do think it will be kind of confirmed once we are to get past those levels. And some targets that we could see coming out of that correction will be something like the 2021 highs right before that market correction, where we could see around a bounce coming in at 474. And it does look like that's going to line up pretty well with where our EMAs will be by that time. Now, it could be even a little bit higher, maybe something like 493, but I am really targeting something around 474 to be the most probable bounce for us. I do think that there is some other levels to take into note, something like this around 458, and then something around here around 409. I really don't see getting back into the 300s. I see a bounce coming in around the mid to high 400s, and I really do think that something will come out about 474 to that 458 level, and I do think that we will find a bounce coming on the weekly time frame off of the 200 EMA and the 200 SMA right around here. Now, obviously, the market isn't looking great, so I obviously wouldn't suggest buying into a lot of positions right now. But I do think this is a good area where we can start to dollar cost average on the way down. If the market is to continue to fall, I think this is a good area to find, 5 to 6 to 7 stocks that you guys really want to see, outperform the market over the next decade. Find those stocks, start slowly averaging into them. So then, once the market does eventually recover, you guys will have all of your shares needed to go ahead and make some good profits in the next bull run. So, that is really going to be it from me, guys. Make sure you guys do drop a like and subscribe as always, as we are on our way to 1,000 subscribers. And I'll see you guys in the next video.